All right, guys. So now we're talking about how to get pre-approved for a loan. And this is going to be through a regular lender, somebody that's doing portfolio loans or someone that's doing conventional loans, DSCR loans. These are all things and the steps in which you would take. Sometimes you may need less documentation. I'm not saying that this is all that you will need or more. Let's jump into it. So first of all, if you're going to go get pre-approved, you want to understand what your credit score is, right? So understand that your credit report is really important. Know that, most lenders are looking for a 620 or 640 and above credit score, especially when you're doing conventional loans. For FHA loans, typically they'll go down to 580 credit score. So make sure that you understand that where your credit is so that when you go talk to them, they understand where you're at. And maybe, a lot of times what I find is when we have clients that have lower credit, we can still introduce them to the lender. So go out, reach out, build that relationship, and talk to them and let them know, hey, listen, my credit is, 547. Is there anything that you can do to help me raise it so that I can get a loan to purchase a home, right? So make sure that you ask them those questions, go out and build those relationships with them, and, see how they can help you if your credit score is low. So the next thing is you're going to gather financial documents. Typically, lenders, once you go out there and you tell them you're looking to buy a house, they will ask you for financial documents. Typically, they're looking for employment history. They're looking for assets, so bank account statements, where you're going to be pulling the money from. If you're pulling it from a stock account, they're going to want to verify that. If you're pulling it from your mom or your dad or whoever, they may also require documentation to do that. The one way around is your mom and dad could wire the money directly to the title company. So make sure that you go through this document checklist that they're asking you for, and you give them all of the documents. So gather all your financial documents. Then you're going to want to research lenders. Shop around. I highly recommend talking to 2 or 3 lenders just to see what their programs are, because just because rates are at X doesn't mean that they're also going to be that all the lenders will be under the same guidelines. Typically, lenders have different overlays based on the investor relationships that they have, and they may have lower rates, they may have higher rates, and they may have some programs. One lender might have one, the other lender might not. So I recommend comparing about 2 or 3 lenders so that you can understand what program they have that best fits your need and maintain those relationships again. So make sure you do that research and ask them what programs they have. Especially for us as real estate investors, you want to make sure that they have good programs. Some of the best ones are going to be DSCR. They're going to be portfolio loans. And my recommendation on this is not to go necessarily with a bank. Banks typically take a long time and they want a lot more documentation. They may say they can do it, but they have a lot more stringent guidelines than a mortgage loan broker who is going to be shopping lenders on your behalf. So then once you do your research, you're going to pick one. Maybe you apply with both, right? But then you're going to fill out a pre-approval, an application, and you're going to get pre-approved, right? So that means that letter gives you the ability, and it tells the seller, hey, I have the money, I have the funds in order to close on this property, within the next 60 or 90 days. So once you receive your pre-approval letter, they'll give that to you or your agent or whoever you're working with, and it typically, like the lenders that we work with, will update that letter on every single property. So it's not just the same letter for all the properties across the board. It's typically they'll update the letter as required because the taxes change, the HOA or condo fees may change as well. So they want to make sure that they're running that specific property under their guideline to make sure that you qualify. For instance, if you're buying a property, in somewhere rural, you may qualify for USDA, but if you're then starting to look, close to the city, then you may not qualify for that because of where the land kind of falls. So they may need to look for another program that fits that criteria that you're looking for. Once that's done, you start house hunting, right? So start looking for investments. That way you understand what your purchasing power is. That's the importance of getting pre-approved ahead of time, because then you can understand what your purchasing power is. So you're not wasting people's time, you're not wasting your time, and you're not looking at houses aimlessly, and you can really start filling out what your goals are for real estate investing. So once that's done, and you find a property that you truly like and love, they'll ask you for a formal commitment. The lender will, right? So they'll issue out what's called a disclosure package, and that disclosure package will be required to be signed. That's when they can lock your rates and whatnot. Once that's done, you go through the process. They'll be asking you for documentation. They'll ask you for, again, verification of employment if that was a criteria, verification of assets, and any tax returns that they may need additionally, as well as conditions that may come out during the process. With the DSCR loan, typically they're using the property to qualify you. They do check your credit. They do check the income of the property. And that's what you want to ask them as well. Again, what does your DSCR loans look like? Is that a good fit for me? Or should I just do a straight up portfolio loan or a conventional loan? So make sure that you talk to your lender, keep them close, talk to the people in your area, see what lenders work best for real estate investors. And especially with in these cases, sometimes the lenders might not even be able to close on the types of properties that you're looking at. So you want to make sure that you tell them what your strategy is, especially with the BRRRR strategy. You want to tell them that these houses may not be habitable. So ask them if they have programs for that. And if not, then that's when you're going to have to go to a hard money lender. So we're going to be talking about that next. All right. I'll see you guys on the next video. See ya.